JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 11th of December 2020. So yep, welcome everyone. Welcome to this Friday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, guys, the first one I want to pick up here is the German index, the DAX, and yep, we are breaking this upside support line. So finally, I would say, maybe for some, but yes, we are breaking this upside support line taken from the low of the 13th of November. We're also dropping below the, or we already dropped below the 13,163 territory, which was the previous lowest point of this week. And as I was mentioning, guys, to you earlier, that if this gets violated, then yes, further declines are possible. Look at this beautiful move today. We already tested that psychological 13,000 territory, or I would say came very close to testing that psychological 13,000 zone. Just fell shy a few points from reaching it, yeah, then we saw a bit of a correction here to the upside. However, of course, the day is not finished yet. Of course, we'll keep an eye on the main trading hours, I mean the of DAX, but then we'll also keep an eye on the cash index, because the cash index might have well, I mean, it might get affected by the trading activity in the US today, which to which one of the indices I will get to in a moment. But looking at this picture here on DAX, if it stays below this 13,163 territory, then this increases the chances for a further move lower going into next week, guys. So a lot of interesting stuff here happening, especially for the bears. Dow Jones Industrial Average. So if you remember, this week, in the beginning of this week, I've mentioned to keep an eye on this potential rising wedge pattern, and what I was saying, that in a way, as long as the boundaries of that wedge remain intact, we cannot really talk about any downside, because as you know, such patterns tend to break to the downside. They tend to be bearish indications, but we need that confirmation break through the lower side first. Yesterday we came close to testing that area, this lower side, but then we still remained within that pattern. If we look at the cash index right now, we can see that the price is trading around the 29,895 territory. So basically near this hurdle, near this lower side of the rising wedge. And this way, kind of increasing the chances for a possible break. However, as I said, we need that confirmation break first. We cannot really do anything yet. Of course, yes, everything's kind of leaning a little bit more towards the downside in a way, but as I said, yes, we need that confirmation break, and ideally I would like to see that daily candle staying below this lower side of the rising wedge, and then yep, we could get a little bit more comfortable with this idea of further declines. But at the moment, we're very careful, we're very cautious, because I don't want to get caught out on this one, and also what I don't want to get where I don't want to get caught out is in a possible false breakout, and yeah, that could be the worst, I would say. But yeah, for now, guys, keep your eyes on this pattern. Let's see how this is going to play out. Now, jumping into DXY, another index, but this one is a dollar index, and yep, today we're seeing a reversal here from this 90.59 territory. As I've mentioned this morning, we needed to see that nice good drop below this 90.59 territory in order to aim for some lower areas. That didn't happen. Instead, that level acted as a very nice area of support. So as you can see, this is the result we're having here. The index is pushing higher. However, we cannot really talk about the upside as well because we're still trading below this downside line taken from the high of the 4th of November. So if you want to aim for some higher levels, wait for a break of this downside line, and then maybe a push above the 91.75 territory could strengthen the upside scenario. Silver is flat, and to be honest, similarly as with gold, similarly to gold, this morning I've talked about gold, and I was saying that in a way there could be a possibility to see gold kind of staying flat till the end of the end of this day, and maybe the bigger moves could come going into next week. So for now, what I'm keeping an eye on here is this level right here, the 23.52 zone, which continues to provide fantastic support. As you can see here, previously was doing the same thing for and playing the role of resistance, but now it's playing the role of support. If that gets broken, this would of course will also place the commodity, the precious metal, below this 23.52 territory, and could potentially open the door towards that 200-day EMA right here, shown as the black line. But at the moment, guys, it is how it is. We're just playing the waiting game, because for the upside, I need to see a push above the 25.07 territory right here. Bitcoin Cash now. I've looked at this one recently, but let me just kind of redraw a few things here. First of all, this downside line kind of got violated, but to be honest, didn't really work out well. So I mean that sometimes happens. We have to take it. Now what kind of worked out was this upside support line drawn from the low of the 19th of November, but this one is a bit of a tentative one. Excuse me. This was a bit of a tentative one, but what I was saying to you guys, still keep your eyes on this 255.90 level right here, marked by the low of the 27th of November. As you can see, it continues to provide decent support, together with these EMAs here, the 200-day EMA and the 100-day EMA. So for now, I'm gonna keep an eye. I'm gonna keep an eye on these two EMAs, and of course this 255.90 level. If that gets broken, then well, this is where it could become a little bit more interesting, and we could see a further move lower. Now, one thing that probably, because this upside support line is a bit tentative, we can actually draw another tentative upside line. We could draw it, for example, from here. And yep, we can see that, for example, this is a beautiful test of this upside line drawn from the low of the 23rd of September. So we can keep this on the chart for now. And in a way, if this upside line kind of provides support, then we could see a nice rebound. And this is the reason why I'm saying that I'm keeping an eye on this 255.90 level as well, because again, look at this, it kind of comes in perfectly. So if this upside line gets broken, then yep, this could also open the door towards further declines, guys. And it could lead to a change in the current trend. So yep, for now, all eyes are on this hurdle right here. Jumping into a few pairs, AUDCAD. So of course the Australian dollar this week is unstoppable, and it's the best, one of the best for performers. You can see here on AUDCAD, for example, it's pushing above this the highest point of November today, so which is around the 0.9618 level right here. So if it stays above this area today, if this daily candle remains above it, then yes, higher levels could be met. Initially, I'll aim for the highest point of September, and then I'll aim for the highest point of July. But at the moment, all eyes are on the highest point of November, and near the 0.9618. If we see the daily candle remaining today above this area, then yes, we could get a little bit more excited with the upside. If by any chance it drifts back down and stays below this hurdle, maybe we could go for a bit of a correction here to the downside going into next week, and where we could potentially maybe target the current lowest point of December near the 0.9457 territory right here, which almost kind of coincides with the 100-day EMA. So long story short, basically all eyes are on this 0.9618 zone, because if we do see the candle staying above it today, then yep, it increases the chances for a further move north. USDCAD. So here you can see that basically the Canadian dollar is weakening. I mean, we saw this from AUDCAD, and not only that the Australian dollar is stronger today, the Canadian dollar is on the weaker side as well. So, and you can see here on this pair, USDCAD is pushing higher. The US dollar, don't get me wrong, the US dollar is also picking up the pace here. So all this kind of is working out nicely here for this pair, for the bulls of this pair, and we're seeing a push higher. However, as you can see, at the moment the rate is kind of finding good resistance here near this 1.2773 territory, marked by the low of the 4th of December, and it also acted as a good support here back on the 8th and 9th of December, and right now it's taking the role of resistance. So if it continues to do so, we might see another slide here, but as I mentioned to you guys this morning, I would prefer to wait for a drop below the 1.2730 zone, and ideally I would like to see that daily candle staying below this area in order to get a little bit more excited with further declines. At the moment, I'm a little bit on the neutral side, I would say, like I said, let's see how this is going to play out. However, if you want to look at some higher levels, wait for a break of this downside line taken from the high of the 29th of October, and then yes, we could maybe start looking at some higher levels. Now, depending on how this is going to shape up here, in a way, previously I talked about this 1.2995 territory, but now this area actually could become a good resistance area. So, and the potential breakout here for the upside could come on a move above the 1.2833 territory. But as I said, depending on how this day is going to end up, probably we might see this pair going into next week, kind of moving sideways here a little bit. And if the bulls take control here and break this downside line, then yep, keep your eyes on this 1.2833 territory. GBPUSD. So of course the pound is getting hammered. We do understand the news. I mean, we do understand what's coming out and what kind of headlines we're seeing, and of course everybody else does understand that as well. And basically we're having a very negative reaction here on the British pound against its major counterparts. So we've noted that, I mean, we saw some headlines today that Boris Johnson kind of said that it's very, very likely that they will have a no-deal Brexit. So yep, the pound is kind of taking a hit, a strong hit, and yep, we're drifting lower. So at the moment, everything's kind of working out according to all the technical analysis idea that I spoke about previously when I was covering GBPUSD. What I was saying, that if we get a drop below the 1.3287 territory, now that's where I'm going to start looking at a bit of a larger correction to the downside, because don't forget that overall we're still trading above this upside support line taken from the low of the 18th of May. So in a way, any move lower here up until this upside line could still be seen as a temporary correction before another possible leg of buying. So keep that in mind, guys. But for now, in the short run, yes, everything's looking quite bad here for this pair. And yep, let's see how this is going to end up and where this pair is going to end up. But in a way, if it's not going to travel all the way lower here towards this upside line, maybe this is going to be left for next week. GBP Aussie, quick update here. I mean, you can see the stronger, slightly stronger Australian dollar and the very weak British pound. That's where this whole week, in a way, that's the result that we got. And well, I mean, looking at this picture, from going from around 180, now it's trading at around 175. I mean, that's quite decent decline, I would say. But the most important right now is to keep an eye on the lowest point of September, which is around the 1.7494 level. We did get a drop initially below this, but of course you can see the bulls are trying to fight back and trying to lift this one above it. They are succeeding so far, but don't get me wrong, the day's not finished yet. So let's see how and where this daily candle is going to end up being. If it's going to stay below this, well, I mean, further declines are possible, because we already confirmed the forthcoming lower lower low. So in a way, if we see the daily candle staying below this 1.7494 territory, then well, brace yourselves, we could see a further decline, guys. So yep, be very careful here. If this area continues to provide somehow support, maybe we'll get a nice rebound here and a push higher, but then at that point still kind of be very careful. We do have this downside line now, which we'll keep an eye on, of course, but yeah, for now, like I said, all eyes are on the lowest point of September. A quick update on GBPCHF. I mean, this morning and yesterday I talked about this pair, and now what I was saying that in a way, if we see the pair dropping below the 1.18 territory, yes, lower levels could be met. And this morning we saw a correction to the upside. We were hanging above this, or not above, but hanging slightly near this 1.18 zone. What I was saying that if this 118 territory continues to provide decent resistance, well, I mean, another slide could be possible, and this came in line nicely with, of course, with the negative news, negative headlines surrounding Brexit, and all this kind of transformed into a drop to the 1.1723 level. I spoke about this level this week, guys, and yes, and today as well, that this is going to be my next target. We even managed to overshoot it, and for now, basically, it's a good result. We've achieved what we wanted. Now we're just going to leave it like this, and we're just going to observe the price action, because I want to see where this is going to end up being today, and I'll take it from, I'll look at this one next week, because again, for now, we already kind of had a decent move lower. We might see another push maybe to the downside here, maybe another test of this 1.1724 level today, but if it provides a bit of support, maybe we could go for a bit of a correction here to the upside, maybe going into next week. But again, yeah, let's see how this is going to play out today. For now, everything's kind of leaning a little bit more to the downside, of course, but yeah, let's see how this pair is going to end up trading today in relation to this 1.1723 zone. Quick update on EURGBP, of course, stronger euro and the very weak pound. That's the result we're getting here on EURGBP. The pair did reach the 0.9220 territory, guys, so it did tested that area and then corrected back down. So for now, I'm still aiming for the upside. We're currently trading above the high of the 7th of October, and I think that's the highest point of October as well. So we're currently sitting above the highest point of October, guys. In a way, this kind of keeps the bulls attracted, I would say. So yep, let's see how far this can go, but at the moment my target is the highest point of September right here, near the 0.9291 zone, or actually 0.9292 level. So that's going to be my next target, but I'm not saying that it's going to get reached today. It's something maybe for next week. And finally, EURUSD. So the pair, well, actually not very strong though, euro, I would say here today, but still stronger than the pound. So yeah, it did initially push higher this morning. We saw EURUSD pushing north, testing again this 1.2155 territory, as you can see, breaking it again, but failing to stay above it. So again, the same idea that I mentioned to you guys this morning, and actually throughout this whole week I was talking about this level. We need to see the daily candle staying above it, but we're not really getting that right now. So again, for now, I'm taking a neutral stand here, and I'm continuing to observe the price action. If by any chance today, by the end of today's US trading session, we'll somehow see this pair popping and staying above the 1.2155 territory, then I'll go for the next target at 1.2215 level, and then yeah, we'll take it from there. So guys, but for now, as long as it remains in here, as long as it's trading in here, I'm taking a neutral stand. So guys, I hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening. I hope, like I said, you enjoyed this. I hope you will have a fantastic weekend, guys. I mean, I hope you will kind of enjoy, relax it, and yeah, come back fresh on Monday, and we can resume with some of these instruments, some new ones. And yeah, we'll take it from there, guys. So have a wonderful weekend, everyone, and I'll see you later. Thank you very much, and bye-bye.